today, and what does it really mean for everybody right about now? The ECB might start downshifting for rate hikes themselves, right? Just like we're doing here in the U.S. Maybe that's a good sign. We'll see. And we had a bunch of names toward the end of last week, highly shorted names that really seemed to start making their way up in the market. Does that mean anything? Well, let's discuss it. In the meantime, what's going on? And welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. Hope you guys had a great, fantastic, long weekend. I really kind of didn't do a whole lot, just kind of chilling out, watching a lot of the games. I mean, that's what I do. When I don't have anything going on, I basically just watch a lot of sports. It's what I love to do. It's one of those things, I will tell you, first game for the third and fourth grade team. Yeah, we won our first game. That worked out well. We'll see how it goes. I got a nice little squad. Now this is team one. This is team one. I got two teams. I've talked about this. Team one, first game, great game. Team two, we haven't had our first game yet. I'll keep you guys posted. But other than that, it seems like we got the market just sitting pretty still at 4,000 right now in the S&P 500. And volatility is fairly low. We've seen volatility at levels that we haven't seen since about a year ago. So what does that mean for most of us? It means we're kind of sitting on our hands. You ever heard this term, sit on your hands? It means you're not going to do a whole lot to get yourself in trouble. You got to pay attention to your capital allocation levels right now, but you don't want to be too deep into the market volatility-wise when volatility is this low. Unless maybe you're looking at buying a couple of things here and there. I won't blame you. I won't blame you if you're looking at a couple of things to buy on the long, going on long on a ball. But for the most part, we all know that making money is easier from the shortfall side. And so right now, there's not a whole ton of opportunities, right? And it's just kind of this low period. This is not going to last for long. We got the end of, of course, we got expiration coming this week, but we also got the end of the month coming up, and earnings are starting to pick up here. So we're going to get some volatility here shortly. Don't worry. Let's pull up some slides. Let's talk a little bit about what we've seen. And for those of you who are joining the show on the Tasty Trade app, you can go to the Tasty Trade YouTube page. There you'll see my face pop up along with a poll for the show. Simple one today, very simple poll. A lot of the time we do polls on financial stuff or what's going on with the market or volatility. This one's a little bit different. This one is, what superpower would you love to have? Would you love to fly? Would you love to have X-ray vision? Would you love some super strength? If it's other, let me know what your other is. For me, and so far 50% of the people looking at this poll, the ability to fly. Oh man, it's always been something I dreamed about. I mean, seriously, I would just always dream about that. Those are the best dreams, where you're just flying and nothing can touch you. But let me know what you guys think. Looking at markets, Goldman Sachs is one of the few big time stocks that's down today, and they came out with earnings for the most part. I mean, they have higher expenses. They're paying people more. They're one of these people whose wage costs are higher. And they suffered from the type of environment that we had. Look, it's interesting. If you look at some of their report and what they said, it's interesting what they're doing. They're combining some industries and saying that altogether these two industries have done well, which basically you only do if one of the industries sucked. So they're doing that to sort of disguise some of the stuff that's really going on. They put aside more money for loan loss provisions. This is the thing that you do when you expect there to be some basically loans that you're going to lose money on because people aren't going to pay. And I bet you that's probably something they're worried about in their credit card division more than anything, right? So it's a very mixed bag for their results, and it wasn't necessarily that great overall. And you got to wonder if this is kind of a harbinger for some of the whole financial sector, right? I mean, that's really where we're going to here. Is this something that they're going to have to worry about? I guess we'll have to wait and see, but the stock is definitely taking a hit today, down 24 bucks as last look, and right around that 350 level, which I think historically, I saw something recently. It says historically the 350 level is something that is bounced off of. Now, who knows, man? I wouldn't try and make that bet at all. But right now, I have eyed it up for the idea of maybe doing a calendar spread, but I don't know, or a diagonal. I don't know. I tried to find some strikes. Maybe we can check again when we get to the portfolio. I haven't seen anything that I love. But I find it interesting that Goldman Sachs, both Goldman Sachs and Morgan Stanley came out with earnings today. Morgan basically gave an upbeat forecast for the next couple of months to a year, and that's one of the main reasons why the stock is rocketing off. Whereas, Morgan Stanley, I should say, gave it an upbeat forecast for the rest of the year, whereas Goldman didn't quite do the same, and they do seem to have more expenses with regard to whether it's staff or whatever, and they might be cutting staff at some point soon. So something to keep an eye on. They've already talked about doing that, but they might be heading more towards that. And this was a little bit different. I feel like theirs were earnings were a little worse than what we've seen so far in some of these banks. For J.P. Morgan, which went last week, for Citi and Bank, and so I don't know. This is one to keep an eye on if Goldman starts to struggle, or maybe this is water under the bridge. Who knows? ECB is supposedly considering a downshift in rate hikes. Now, last time they had a 50 basis point hike. I think that's the largest that they've done. For a while, they were trying to downplay the idea of inflation in their economy, but they can't no longer. And I think this has been kind of a good thing for them. I mean, to admit the fact that they've had issues. Now, downshifting means, well, the same thing that we've kind of started to see here from the Fed. Are things going to calm down with regard to rate hikes, right? This is one of those things that they have to figure out, but it does seem that they're kind of on the same path that we are in the U.S. You're not going to see as many or as any big rate hikes. So overall, I think this is kind of getting to the idea that maybe inflation is decreasing, which might be a tailwind for stocks. I guess we'll have to wait and see. Speaking of, we've already seen some of this tailwind in stocks, right? Markets have kind of made a strong move to 4,000 here in the S&P 500 over the last several weeks. And it's been sort of this slowly climbing bullish environment. Nothing major, but markets have seemed interested in moving upward. And we saw last week the very highly shorted names, the BBBYs of the world, the Carvanas, the Silvergate, which was a really highly short interest name right now, or was recently until last week, SI, a host of other names made big moves last week and towards the end. Now, again, I mean, BBBY moved up 200%. Yeah, I mean, overall it was like $1 and change. Now, that's a lot for a $5 stock or whatever, but still, just keeping in perspective, it's a big move, right? Especially for a company that theoretically was supposed to be going bankrupt sometime soon. I've seen this kind of thing before. It's really weird when it happens, but nevertheless, it does happen. And then the phenomenon I'm getting to overall is at the end of a run, sometimes you will see the trashy companies making a move. You do wonder if this is signaling the end of our run. I don't know if we get any clarity yet for this week, because I think this week is just seemingly going to be very quiet. I know we have a lot of macro data that's supposed to come out tomorrow and a lot of Fed speak. Maybe those can make the markets move, but I'm wondering if that's just are we taking a breather right now after that end of the move? What will be the next things to take us higher, right? Will it be consumer discretionary? Will it be consumer staples? Will it be tech again? Will it be, something else? Bitcoin's been strong more recently. I don't think that's the thing that takes the whole market higher, but you get what I'm saying. What's going to be the next thing that takes us higher? I don't know. But speaking of going higher, the U.S. and China lead Space Race 2.0. Let's take a look at leftovers. This chart is as you can see on the right here, the distribution of investment in private space companies since 2014. Space privatization has been a big thing over the last several years, right? We see Elon, he has the, whole setup there, and that's been the other company that he has. You guys know what I'm talking about. I'm blanking on the company right now. But the other big company that he has that's invested in space. It's not space, that's Virgin Atlantic. But nevertheless, the privatization of space has been a big deal. As a matter of fact, total investment in that whole space since 2014 is $265 billion. Of that, 46% has gone to the U.S., 29.8% has gone to China. After that, it's a sprinkling of different companies across the world. You got Singapore at 5.2, you got Great Britain at 4.3, you got Indonesia at 2.7, India at 2.3, France at 1.2, 1.1 is Canada, and then the rest is a couple of different countries altogether that comprise 7%. Now, it's been an interesting thing to watch as other companies have started to lead the way. NASA still exists, but that's not the primary thing, right? Like, it's not so much a government thing anymore. It's more a privatization thing. And as a matter of fact, there's more on this type of topic. SpaceX, thanks, Grumpy Mike, appreciate it. That's Elon's company. Had a temporary blackout. There's more on this topic. I actually have a link here in the YouTube stream to a Luckbox article from Sage Anderson. So take a look at that, and it provides a little bit more information on what's going on with space travel and privatization of space right now. Let's move ahead to the next slide. Forward curve. Does this look familiar? Yeah, this is what we call contango. This is exactly it. This is a calm environment. Contango, for those who are new to this idea, this is the VIX forward curve. This is the volatility futures forward curve. These are where the current futures are trading for each of these months. So if you look at /VXF23, that's January VIX futures, and that's the price, or it's somewhere thereabouts where the current price is trading right now. If you look at February, same deal. And so when you line these up and string them together, you can get an idea of how volatility is trading. And overall, when the markets are calm, it looks like this. Volatility is lower in the front than it is further in the back. September, we have no idea what September volatility is going to be like by the time we get there. So that's why it trades a little bit elevated, right? We have no idea. That's why in normal time periods of volatility, each one is higher because we have no idea what the next month is going to be like. We know it might not be crazy higher compared to Jan. We just know it's going to be higher. And so this is classic, what we call contango. On Friday, the VIX closed at 1835. That's the lowest level we've seen in over a year. And so volatility is fairly quiet right now. And when volatility is quiet, you don't necessarily go out and force a lot of vol trades. You sort of stack your capital and you wait. You wait for good opportunities. Now, it doesn't mean you can't go out and buy, some stock right now and at levels that you might, be interested in. I've been looking at a couple. I'm not exactly sure if I want to do it or not yet. Two of them I've kind of looked at are one of them, I should say, more than anything. So Paramount does have a dividend. I'm kind of interested in looking at names like that have a stock dividend that's not too crazy expensive. That stock is $20 right now. It is up a decent amount on the year, which is the one thing that makes me nervous a little bit, but it doesn't mean it can't go higher on the year. I probably have to analyze it more. If I'm going to take that type of long position buying stock, that's a commitment, guys. Like, some of you are like, trading options, that's a big commitment. Look, buying a stock, that's a commitment. For me, anyway. It means I like you. It means we're dating. We're going steady. It means something. So, I got a question here. How can we trade these VIX futures contango in practice? Well, it depends on how you can trade them any way you want. You can buy or sell VIX futures at any given time. So I guess you're trying to figure out how can you take advantage of contango. You can't really. There's really no way to take advantage of it. Sure, if something's in contango, you could say, I think volatility is going lower, and you can sell VIX futures, but do you really want to sell VIX futures to open here? I don't know. So that's up to you. But overall, how can you take advantage of VIX futures? You can trade them in any manner you want. Maybe you think that, here's the thing. If you think volatility is going to go up, and you could literally trade a calendar spread in VIX futures, right? If you think it's going to go up, you would buy the February and you would sell the Jan. Now, I know that kind of sounds weird because you're thinking, why am I buying the one that's higher? Well, if you think volatility is going to rise, then the whole thing will rise, right? Everything else is in backwardation. Maybe you should leave VX alone. Yeah, maybe you should. Maybe you just wait until volatility gets higher and then you trade it then. It's one of those things to think about. Let's move ahead to the next slide. One of the other things that has happened, we've seen volatility subside, as we just talked about on the VIX futures chart, but also the dollar has subsided. And that's one of the main reasons why volatility has calmed down. One of the main reasons why we've seen the market sort of bounce more recently is because the dollar has calmed down. The dollar was wreaking havoc on everything. If you remember last year, look where it was. Look where it was. It was just steadily rising at any given point in time. And it really created this volatile environment, right? Not only the dollar, but also yields were higher. Rate expectations were soaring, and so that was making the market fairly nervous. And some of the other crap that we had to deal with last year. But overall, now that volatility, now that the dollar has started to come down and subside, we've seen volatility subside. So the question begs, if we see the dollar start taking off again, does that mean volatility rises? I would love to say yes, but this market loves to throw you for a loop and things can change on a dime. So keep that in mind. But if you do start to see moves again, check in the dollar, check and see if volatility is corresponding. That'll let you know. Let's move ahead to the next slide. I know Para has been kind of whippy, right? Oh, you've been looking at him too. See, I'm not the only one. Market feels like it wants spring to arrive for this bear market. I don't know. I think we're going to get to find out a lot about this market in the next coming weeks over earnings. I think that's kind of what we're waiting on right now. The market has kind of made a slow move towards a level that is somewhat sort of giving us this complacent vibe right now. And, now we're just kind of holding on and waiting to see if this is for real. Is there a bull market from here, or is this another bear market rally? I guess we just have to wait. But, of course, because of this rally, we've seen what? We've seen cyclical names really bouncing. They've been hit really hard. And the top cyclical names that I've seen bounce a lot of them have been travel-related names. So CCL, RCL, NCLH, of course, the cruise line names. You've seen casinos, Wynn, MGM, LVS making moves, and, of course, travel companies like EXPE and Booking. So these have been the names that have really been on the move since the year started. Those are cyclical names. And it's been a really strong move. The question is will this chart resemble what we saw in 2020, or will this thing this just a blip on the map, and will we see a retreat here and a lot of cyclical names? I don't know the answer, but I do always like to keep this perspective in mind, because when you can compare the two of these, this is consumer discretionary, XLY, versus consumer staples. We've looked at this plenty of times before. We saw this fading for most of last year as the market started to reprice itself. But now, after a tough 2022, the question begs, will we see cyclical names, which, again, gather their name from really kind of having these interesting cycles? Will we see cyclical names start to bounce up this year? Let's move to the next slide. For earnings, we got Interactive Brokers. We got another airline making moves. I tell you, UAL has been surprising. Like, that's another name. You talk about travel names. A lot of these airlines have been on the moves, save for Southwest Airlines. But UAL has been trading on the way up. So is AAL. And flights are expensive to some degree. Again, I tell you that. Schwab has earnings. JB Hunt, travel name as far as trucking, which gets into supply chain, which has really been a term that people have kind of put to rest more recently, right? Nobody's talked about supply chain as much. And then another bank, PNC, so a mixture of earnings here. Lots of Fed speak throughout the week. There's going to be a lot of Fed speakers for the rest of this week, and I think their blackout period starts coming up this weekend, where we're not going to hear as much chatter from them as they head into the meeting. Retail sales will come up on Wednesday. We get to find out a little bit more about the consumer, which is always interesting, right? Consumer spending is 2/3 of GDP, so we get to find out a little bit more about that on Wednesday. Bank of Japan rate decisions also coming up on Wednesday. Remember, Bank of Japan has been the last ones to really raise rates. They're like, what inflation? There's no inflation problem. What are you talking about? They completely ignored it until at the end of this rate hike cycle for just about everybody. They decided to raise rates just by 25 basis points back in December. You remember that made for an interesting day. And then finally, we got options expiration coming up on Friday. Should be a decent size one. Remember, Jan is the expiration that hangs around for more than a year, usually with leaps, right? So usually those end up being pretty sizable expirations that people have outside of us tasty traders who pretty much roll every few weeks. Most people have Jan options that hang around for a long time. So could be an interesting expiration. We'll see. And by interesting, I mean maybe we'll get some movement around it. Other than that, expiration is not fun overall and annoying to trade around. Number of S&P 500 stocks above the 50-day moving average, 75% at 380. So fairly healthy market. Let's move to the platform, please. Taking a look first at markets, just to give you an idea of how much this market is not expecting much this week. $5.11. For the SPY straddle that closes on Friday. And for the 398, since basically that's where we are, so 511 divided by 398 will give you the idea of how much the market thinks we're going to be moving up or down for the rest of the week. In percentage terms, in this case, that's 1.3%. Now, just to give you an example, heading into last week, heading into the CPI number, the market was pricing 2.2% move on that particular day. We didn't quite get there, didn't quite move that. But this is, for those who are new to the game, a little bit of a back of the envelope way of getting an idea of how volatile the market or how much the market is expected to move on any given week. Not a whole lot. I have tried to, I've definitely upped my cash levels. I'm only I have 43% of my buying power in the market right now. I did do a couple of trades today. UNH has been one that's not worked for me. So I've had this calendar spread on. I had the, when stock was trading around, I don't know, 500 or 515, I had the 540 calendar spread on, Jan 540 sold, Feb 540 long. Obviously that hasn't worked out. It's been one of my losers. I decided I still like the trade. I still feel that healthcare is one of those stronger names in the market, and I still feel like this could sort of rebound from this level right here back up to around the 520 level. So low vol environment, low IVR. I did similar trade, just moved it further out and changed strikes. I did the 520 call spread now, 520 Feb, March 520 call spread. Some of you maybe, I mean, this is going to close out this week. This is going to expire worthless. So I will have the Feb, March 520 call spread on, and I will have a extra long call on the Feb 540 in case the stock wants to run up. Or synthetically, I also have the short 520, 540 call spread with a long extra 520 call. It's all a matter of how you look at it. You know what I'm saying? So either way, I'm invested in the idea of a long UNH situation for the most part. I want UNH to slowly grind up. That would make me happy. I would be okay with that. And what else do I have? I did, NVIDIA. I did, NVIDIA stock has been making a run over let's see, how long of a time period? I just noticed the big run today. But, yeah, the last several days, what's that? 1, 2, 3, 4, 5, 6, 7 days in a row, NVIDIA has been up just above its 200-day moving average. Interesting channel it's got going on there. I mean, never mind. I decided to take a short-term play in it. So as it's making this big move, I decided to trade it in the earnings cycle. It has earnings coming up on Feb 15th, so this is a while from now, and I decided to buy a put spread just for a trade. And by just for a trade, I mean if this stock drops over the next couple of days, I'll be willing to take this thing off. Same thing I did, similar deal I did in JP Morgan last week, right before earnings. I think that's the last time we talked in this manner. And right before earnings, the night before earnings, I put on a put spread. Stock was down on earnings, worked out great. Closed it out at the beginning of the day. I was glad I did because JP Morgan ended up being up on the day on earnings last Friday. Not sure if you guys noticed that. That was kind of interesting. Doesn't look to be the same for Goldman Sachs today, though. Goldman, like we said, they got some expenses headwinds. They've increased their loan loss provisions because they're worried about possible defaults on credit cards and things like that, which, not surprising given the environment. If you're hearing a lot about consumer credit is up big time and what's going on in the car space, and a lot of people are potentially underwater on loans on that. So there is this sort of interesting animal that's building up in the credit space, and I think Goldman is trying to be careful there. It's a big move down in stock. Now, I was trying to eye up. This is a perfect situation I usually like to try and eye up a diagonal. I haven't been able to find one. So being long the at the money, right, at 350, and then trying to find a way to offset it. What did I do? The 350, 345. Now, I don't like the idea of, I would like to be able to, I'd usually like to try and find a diagonal where I can pay half of the width of the strikes And this is not it. So right now, this is a $15 wide diagonal, right? 350 I'm long, 365 I'm short, but I'd be paying $10.30 for it. I don't really like that risk reward so much. And my extrinsic is fairly high here at 887. I don't really like it. I would much rather if this thing were $7 and change. I haven't been able to do it, but that's the kind of thing I'd like to do in this type of environment. BABA is not one. I mean, if you follow the show, you know I had a diagonal similar to that in BABA. It was half of it. Baidu was one I was looking at this morning as well. Stock was down pretty decent amount. Not exactly sure why. Didn't really care why. Was looking to see if I could do this type of diagonal, right? 130, 145. It's $8.55. That might be a little nitpicky, but still, same deal. $8.55, and I was sort of, the same deal. A lot of extrinsic. It's more than half the width of the strikes. Width of the strikes, if half would be 750, this is a full dollar more. I'm not in love with it. So I guess my point is I'm not really chasing trades right now. I am looking for a lot of things, but I'm not necessarily chasing trades. Looking up in the chat here. I was buying bearish poor man's puts on UNH. Long XLV, but short UNH. That's cool. What percentage of XLV is UNH? I haven't looked in a while. Make sure UNH just has a decent size position within the XLV ETF. You know what I'm trying to say. If you want to see people to access clean drinking water and other basics, then you should expect birth rates to go down. Oh, this is the China trade. Yeah. I mean, it is kind of surprising hearing today that China's population is kind of declining a little bit. Shocking. Yeah, so I guess before we leave, back to that idea of buying Para. I mean, this is one of these where I'm kind of challenging myself. This is a stock that really, how long has the stock been around? It just came around in the last year, right? I think. I think this is a result of kind of a spinoff or something like that. Correct me if I'm wrong. I can't remember who it spun off from. But I don't know. I was looking at possibly, whether it's worth buying, a stock or two here and there right now as markets are kind of quiet. I thought this thing was a spinoff. Maybe I'm wrong. Could have sworn it was. It used to be something else. I don't remember the current situation of the stock, but UNH is 9.74% of XLV. Good to know. But I don't know. I am looking at possibly buying a name or two that has a dividend that I can collect divs on and maybe sell calls on too. That's a good environment. That's what this environment is about. Pretty good environment. But if that's one where you have to dive into more of the fundamentals, and maybe we'll talk more about that next time we're on the show. So that's all I got for now, folks. Thanks for watching. And as always, be smart, be patient, trade small, trade often. I'll see you guys later.